Traders at the United Bank for Africa expect sustained activities at the Treasury bills market as investors continue to digest the signals from the newly reduced rates from this week's primary market auction. Chuka Nwachukwu, chief dealer and head of trading at United Bank for Africa, joins me now for more market movement and what we should expect in the coming week. Thank you so much for joining us, Chuka, and great to reconnect here. Let's start off really now with a significant stop rates decline we are seeing here, over 200 basis points from this week's primary market auction. Walk us through the details here, subscription volume, allotment, and what these lower signals mean to investors at this moment.
Thank you, David. Good to connect again. Like you mentioned, we had the NTB auction this week, as well as OMO. Both securities had a drop in yield. The NTB, for example, we saw about a 254 basis point drop in yield. The auction itself, about 250 was on offer, and then 1.3 trillion was the subscription. However, they sold slightly below what they offered, around 201 billion. And so that's kind of like declined the yield further. We saw the next day, which was yesterday, we saw trade on the longer end close around the 15% levels. And that obviously is one of the lowest we've seen so far over the past 1.5 to 2 years. So the security itself, is high in demand. The fixed income market, like I always say, has a cycle. If you don't get in when you're supposed to get in, you lose opportunities. And so this regime we're entering is low yield regime. And that's obviously why you see a lot of investors, trying to pick as much as they can. From the subscription, you will see that, a lot of people lost at the auction, and those demand filtered into the secondary market where we saw a further decline in yield.
Yes. And now, touching on the bond market now, where should we expect quotes, especially take, for example, the 2033?
Yeah, so the 2033 has been investors' delight throughout this week. It traded yesterday around the 16 levels. So it's a bond that is high in demand. And then another factor again is liquidity, because during the week there were some maturities, well over 700 billion came into the market. So some of these funds were reinvested into the NTP space, and then some into the bond space, especially 2033, and that's why we've seen them decline, a further decline in yield on that 2023, and that bond is actually very scarce, and so it's obviously going to go further down.
And how long would see the market liquid at this rate, at this moment? In your term, what should we expect?
Monday market opened the credit of over 200 billion. It's currently, the market liquidity is in negative of about 1 trillion. And so, except FAC comes in, which is hopefully next week, the liquidity will continue to be tight, and that will obviously affect the rate. We've seen rates over the past 2 days, hover around 28-31%, and so that tells you how tight the market's liquidity is. So that obviously will continue, except the fact comes in next week, and that will help the situation.
Yes. And looking at the situation even further now, how strong do you expect the Naira further into the rest of this quarter? We've seen some sustained FPI flows, but where should we expect rates for the Naira against the greenback and other global currencies?
So the Naira has done well, especially the last few weeks. I've seen it trade within the 15 levels. And so the 1500, that's about 1,500 levels. This obviously has to do with the sustained inflow, like you mentioned, from FPIs. And then, of course, increase in the external reserve, slight moderate increase in the external reserve. So for the next few weeks and few months, we expect to see Naira continue to appreciate. But again, I do not see it go below 14 1,400 at these levels at this time. So we still see it within the 1,500, 1,600 levels.
And lastly, before I let you go now, let's touch a little bit on the inflation forecast. We're expecting the National Bureau of Statistics to release the inflation numbers for the month of June next week, Tuesday. But in terms of inflation print, where should we expect the numbers to unfold? We've already had conversations around money supply growth. Yes, that's moderating. We have a disinflation trend, but how can we really consolidate on that? That's the big question. So for you now, what do you expect the June inflation data to look like?
So the trend so far has been a downward trend. The last inflation we saw it drop about 74 basis points from 23.71 to 22.97, and so that shows that most of the parameters put in place are working. For the next inflation, we expect to see I expect to see it drop, moderately again. It might not be as huge as this particular inflation, but I expect to see further decline inflation figures.
Chuka, I would have to leave the conversation here for now. Thank you for joining us on the show today, and it was great to reconnect. That was Chuka Nwachukwu, Chief Dealer, Head of Trading at the United Bank for Africa.